All right, let's talk about one of the biggest hurdles on the NMLS exam, RESPA. That's the Real Estate Settlement Procedures Act. Look, if you felt totally overwhelmed by it, trust me, you are not alone. But don't sweat it, we are going to crack this code together.
Yeah, I know that feeling. You're staring at the RESPA rulebook, your head is spinning, and you're feeling stressed. I get it. It's a really complex law, and honestly, the exam questions can feel like they're designed to trick you. But the good news? We can totally simplify it.
So here's my promise to you. In the next 5 minutes, we're going to cut right through all that noise and get to the absolute core of RESPA. We're going to cover exactly what you need to know so you can walk into that exam feeling confident and ready to go. Okay, Section 1, decoding RESPA's purpose. Why it even exists and what it covers. Here's the thing. First, we've got to get to the why. Because if you can understand the real purpose behind RESPA, I promise you, all the rules are going to be so much easier to remember. Okay, so this right here, this is RESPA boiled down to its absolute essence. It's all about consumer protection. The law has 3 core goals. First, give borrowers clear disclosures about settlement costs. Second, cut down on those closing costs by getting rid of sketchy, abusive practices. And third, and this is a big one, prohibit kickbacks and any unearned referral fees. Seriously, everything else we're going to talk about is built right on this foundation. Now, this is a super important point for your exam, so listen up. RESPA doesn't cover every single loan out there. Nope. It only applies to what they call federally related mortgage loans. So what does that mean? Well, think about your standard residential loans. First liens, refinances, those are the ones that fall under RESPA's rules. And just as important as knowing what it does cover is knowing what it doesn't. Because the exam absolutely loves to test you on the exemptions. So lock this in, RESPA does not apply to loans for business, commercial, or agricultural purposes. It also doesn't cover temporary financing like bridge loans or loans on huge properties of 100 acres or more. Be on the lookout for these. They are classic trick questions. All right, Section 2, the 4 pillars of RESPA. These are the core sections you must know. Okay, now we're getting to the real heart of it. We can break down the most important parts of RESPA into what I like to call the 4 pillars. These are the 4 sections you absolutely, positively have to know for that exam. That's it, just 4. Sections 6, 8, 9, and 10. That's your roadmap right there. So let's dive into the very first pillar, Section 6. Okay, Pillar 1, Section 6. This is known as the servicing rule. A good way to remember this one is that it covers everything that happens after the loan closes. It's all about how the loan servicer has to treat the borrower from that point forward. So Section 6 is all about making sure the borrower gets treated fairly. It sets these really strict timelines for servicers to respond to questions, and it lays out loss mitigation procedures. What's that? Well, for example, if a borrower is unfortunately facing foreclosure, the servicer has a specific amount of time, think 45 days, to evaluate their options. It's all about protecting the homeowner. All right, moving on to Pillar 2, Section 8, the anti-kickback rule. And listen, if you only remember one thing from this whole explainer, please make it this. Section 8 is the undisputed heavyweight champion of RESPA exam questions. You will see this. The core idea of Section 8 is actually pretty simple. You can't give or receive anything of value for a referral. And think of value as broad. We're not just talking about cash. It could be gift cards, tickets to a game, or even something that seems innocent, like a thank you for paying for an agent's marketing flyers. It also flat out prohibits paying someone for work they didn't actually do. The whole point is to stop those hidden costs that ultimately get passed on to the consumer. Okay, let's keep it moving. Pillar 3 is Section 9, and this one is super simple and direct. It's the borrower's choice rule. This section really is a perfect example of RESPA's whole mission, which is putting the consumer first. It says a property seller can't force a buyer to use a specific title insurance company as part of the deal. The bottom line, the home buyer always has the right to shop around for their own title services. And that brings us to our final pillar, number 4, Section 10, the escrow account rule. This one is all about how lenders handle the money that's held in escrow, for things like property taxes and homeowners insurance. So Section 10 really does 2 main things. First, it puts a limit on the amount of cushion or extra money a lender can make a borrower keep in their escrow account. And second, it demands transparency. Lenders have to send out both an initial and an annual escrow analysis so the borrower always knows exactly where their money is going.
All right, Section 3, prohibited versus permissible, and spotting violations for the exam. So we've got our 4 pillars down. Now let's actually apply them. Because the exam isn't just going to ask you for definitions. It's going to throw scenarios at you, and your job is to spot the difference between what's okay and what's a flat-out violation. So what is actually illegal under RESPA? This is the core question you're going to face on the exam. It'll be disguised in all sorts of different scenarios, especially when they're testing your knowledge of, you guessed it, Section 8. Okay, let's draw a really clear line in the sand here. Paying a fee for actual services performed? Totally okay. Co-marketing with another professional where you both pay your fair share? That's fine too. But giving a real estate agent tickets to a game for sending you a client? That's a violation. Paying an unearned fee just for the referral? Big violation. It always comes down to one simple question. Are you paying for legitimate work that was actually done, or are you really just paying for the referral itself? Okay, Section 4. How to ace the exam. This is your study strategy. We've covered the core concepts, right? So let's wrap this all up with a simple, but really powerful, strategy to lock this stuff in and totally ace those RESPA questions. Here it is, your 3-step study plan. Step 1, focus on the violations. Get obsessed with them. Practice identifying what's allowed and what's not, especially under Section 8. Constantly ask yourself, is this a referral fee? Step 2, know your key definitions. You have to memorize terms like settlement service and thing of value. And finally, Step 3, use your study aids. Leverage those practice tests and any approved materials you have to really make this knowledge stick. You know, the crucial point is this. Success on the RESPA questions isn't about memorizing every single word of the law. No way. It's about developing an instinct for spotting a violation. Knowing how to do that will be your key to passing. That's the whole game. So now, can you spot the illegal referral fee? As you keep studying, just keep asking yourself that one simple question over and over again. Focus on those 4 pillars we talked about. Run through as many practice scenarios as you can, and I'm telling you, you won't just pass. You are going to absolutely conquer the RESPA section of your NMLS exam. You've got this.